Hello and welcome to the How to Trade Like a Pro podcast. I'm Wieland Arlt and in this episode I welcome Giovanni Trombetta from Italy. With Giovanni, I'm discussing AI and trading and how helpful it really is for you. Before we start, please take a closer look to the risk disclaimer in the show notes. Now enjoy the conversation. Welcome, Giovanni Trombetta. Giovanni is a trader and a dear colleague, dear friend from Italy, from Rome, and he's member of the board of directors from the International Federation of Technical Analysis, from the IFTA. And I'm very happy Giovanni is here together with me, ready to discuss trading, markets, life, and whatever comes to mind. Once again, welcome.
Thank you. Thank you. Thank you so much, Wieland. I'm so happy to be here. We know each other from a while, so every time we meet, we talk about trading, life, approach to what is possible to do in a professional way inside IFTA as well. So I'm so happy to be here.
Yeah. So and it's overdue to talk and to discuss and just to talk a little bit about the things we do and we love. So let's just get into it. And I mean, basically, what's always comes to mind first is how did it all start with trading for you? I mean, you're not really just coming from the banking side; you're from somewhere else, right?
No, in fact, it's a funny story, I guess, because we are talking about the last years of the previous century, so 98, 99, then 2000. In that period, I was completing my degree in engineering at the University of Rome. But I had a friend of mine, that was trading from a while. He was coming from the banking side, but he was trying to do by himself what every one of us is trying to do at the beginning, to trade on the markets, just to understand and to find a way to make money on the market, basically.
Yeah.
And I remember that that evening that I was with him in Venice. He had shown me a book that was, I don't remember exactly the title of that book that I mention every time, but I should find which was. But it was something like from the weather forecasting to the market forecasting. And I was so curious at that time because, having a mathematical approach to things, I was thinking that was impossible to predict the market just looking from the prices, from the volumes, from the past, let's say. And so with this in mind, so with a contrarian approach in mind, I started to read and to learn. And step by step, I started to convince myself that I was wrong, that there was something that at the beginning was not simple to me to understand, that allow you to make a little piece of forecasting time by time. And after a while, just a short story, I started to cherry picking the best stock in US markets, especially penny stocks. Because, at the beginning, you are young, you want double-digit gain, and unfortunately, we know very well at the beginning also double-digit losses. And was the funny part of the journey, but also, let's say, the less professional. Then we are on 2003, 2004. I changed my mind and I changed completely approach. What I was studying before starts to come back again, and I start to create some models to verify and to insert some statistical stuffs inside what I was doing. The first action was not to trade anymore penny stocks. So I changed completely approach because I was I was losing money in the long run. Okay, so as many of us started, when you have big money, then it's more likely that you lose money. And while when stuffs are starting to become boring, then things will be better. This is my experience, my own experience. So I started to create trading systems at the beginning with TradeStation and all the professional suites software that were on the market at that time. So some Italian products that was here in Italy, where I am right now, and then, but basically with TradeStation, multi-charts would have come later on. Then the story is in the middle. I deepened this kind of approach. I met one person that I still miss because he's not with us anymore, unfortunately. That is Michele Maggi. Michele Maggi was a professional in trading, but also a very curious person here in Italy. He founded a trading library that is an editor, basically, of books for educational. And he used to translate all the books coming from the US at that time for Italian audience. And with him, I entered inside, let's say, the magic ring, let's say. That means that I was lucky to meet a lot of professionals around me. I met for the first time John Bollinger, for instance, in Italian Trading Forum. It was like, I guess, 2005. Okay. Then Larry Williams and many others. Of course, I cannot say that they are friends, but now for many of them, we have let's say, we met everywhere in the world, and so okay, we work together in some sense. Okay, and then the last phase of my journey, the last phase, the one in place now, is to make a last addition to the story. That is the artificial intelligence.
Yeah.
Then we can talk a lot about that because it's now if you open the TV, if you take a look to the website, everyone is talking about artificial intelligence, even if it's not real artificial intelligence, because now there is the hype, there is a big attraction talking about artificial intelligence, as you know.
Yeah.
But that was a way for me. I will add just this, then I will let you go on. It was a way for me to make even stronger the model that I was using before.
Wow. Well, I mean, it's a huge journey, and it's a great story as well. But coming from penny stocks to AI is quite a distance to cover.
Yes, far away.
But at the end, I mean, that's the evolution of the trader as well. Because what we do, we start somewhere because we hear something, we want to try something out, and then then people split into different groups, like sticking at one story, giving up, or just developing more skills and evolving and doing the whole journey, which never stops, by the way, as I'm pretty sure you know as
It's
well.
true. It's true.
So that's what it's about, and I'm totally excited to discuss with you about AI, because when it comes to trading and trading systems, and I had this discussion with Tom Starke from Australia.
Yeah.
And we were discussing about algorithms in trading, basically all the trading systems, and like putting a bunch of algorithms together to have the perfect trading strategy, setting the strategy of strategies. But I think AI is just on top of that. Is this right?
I guess you're right. Let's deepen a while what is for me AI. Okay, all of us know what AI is in general in industrial products, in on your mobile phone and whatever. AI came at the point in which the data, the number of data that you had, starts to be huge. At that point, the question was, of course, you can continue just to look at the screen and to take a decision, because it works. For many out there, it works.
Yeah.
For you, it works. For many, it works. But especially if you come from a mathematical approach, and then you make a first mistake. Okay, let's talk about this. The first mistake that people like me do is to create a model that more or less describe what is happening in front of you. And then your expectation is that that model will continue to work. Okay. But markets are not math. And we know that the same thing that you are inside the market can change the market itself. It reminds me physics about thinking about that. So it's a game in which if you play, the game change. Okay. Of course, if you are an hedge fund, the game will change a lot. If you are a single trader, we can consider nothing is change.
Yeah.
But this is an element very, very important. So, especially if you are approaching the market with models, with trading systems, with clustering and whatever, and the number of the data that you have starts to be huge. The only way to cover this leakage of information, not considering this huge data, is to insert AI in the game. What is AI? AI is another model on top of your quantitative models. Then, if you want, we can diversify and we can define what is quantitative models, what are quantitative models, and what are AI models. Yeah. But basically, you can consider that the quantitative models is, for instance, a trading system based on the variance of prices across an average, okay, to simplify completely. Then AI can help you to consider other elements that play in the game. For instance, not just the volumes, but for instance, the implied volatility on the index on another index that is not related directly with the asset that you are trading, for instance, or whatever. So human mind is limited in terms of not power, I would say, because the power that we have is absolutely not limited, but the capacity of concentration, the capacity of working on different markets at the same time. This kind of professional approach could be powered by a model that helps you to say, okay, now the probability is higher, now the probability is lower. More or less, is this the way in which I use AI? Then we can deepen the different approach of AI that we can apply on this. Let me say one additional thing, if I can. Everything starts from a definition that when I came in SIAT, as you know, the Società Italiana Analisi Tecnica, the Italian branch of IFTA, we were trying to define. At the beginning, technical analysis for all of us was taking a look to the graphs, drawing some lines, and nothing more. Okay. For all of us, reading the books from the past and whatever. Then, step by step, this technical analysis word starts to have a wider meaning, I guess. And with SIAT and with IFTA, we are trying to spread this significance, this meaning. There is a technical approach. Technical approach is not related to the fact that you are discretionary or trading system based. It's based on the fact that you use technical stuffs, whatever it is, pattern recognition, meaning of the market, just looking to the screen, Elliott waves, moving averages, but also statistics. So standard deviation, sigma, or whatever, all together to build something that could be predictive, because the goal at the end of the story is to make money. This is the funny thing of markets,
That's
because
the point.
you can use even I don't know, nuclear plants to do that, but if you lose money, it doesn't work.
Yeah.
And it's something that democratized. Sorry for my English, but maybe you understood what I mean. Make technical analysis for all of us.
Yeah.
With different shades. And so this is the thing I prefer. And so, just to conclude this point, even AI is technical analysis. That is the point, because if technical analysis starting from the graph grow up with quantitative analysis, that is the approach of statistics on the markets, basically, then we can discuss about the limit of this approach. Then AI is another algebraical approach that comes from algebra and comes from quantitative analysis as well. So it's another level. It's a second roof on top that we add at the game. But we are still talking about technical analysis in my mind.
Yeah. Interesting. And you know, whenever people think about, okay, how can I use AI for trading? I'm pretty sure the first thought is about, yeah, now I'm gonna be rich just because AI does the job, right?
Yeah, it's not true, of course.
What about this?
Yeah, this is, you know, we live in times in which everything is getting faster and faster.
Yeah.
I'm in charge also with blockchain, with that kind of world in which AI is strictly connected. And every day I hear something like, oh, okay, forget what we have. This is the new revolution. And then again and again and again. Okay. But I have gray hair in my head. And it doesn't mean that I am old, I cease to say, but it means that me and you, we saw many of these revolutions across time, and many will come in the future. Going back to the artificial intelligence as a weapon, as an instrument, of course, it's not the answer to everything. It's like a war. It's like a war in which each contendant, each part, is using weapons more powerful every time. Before was the graph on the screen, because we don't have to forget that on 80 years of last century or 70 years of last century, in Wall Street, there was just the line with the prices scrolling, nothing more than this. Then the point of figure, then the other approaches, and then there is the AI. So then I will later on I will take something more specific about AI, how I use AI. But answering to your question, this new revolution that is in place, because for sure we are talking about a revolution, will drive and is driving also what the big companies are doing in the financial world. For instance, I had some talks also with people of JP Morgan, Goldman Sachs in the past. And my first question was, are you studying this? Are you using this? Because I was very curious coming from the outside, coming from the retail world. And also during the experience that I'm making in the institutional world with Rocket Capital Investment and with Hidden, my approach was quite the same. Okay, how often do you use AI, and how do you use it to enhance your performance? At the beginning of the story, especially the big company was using AI just to clusterize their customers, nothing more than this. So nothing to predict the market, nothing to make money directly, but to make money indirectly, just putting the AI eyes on us as clients. Okay. Then let's say that after the machine starts to grow as a power efficiency and power in general, this starts to change. And then these big companies are trying to make projects to predict directly the market. Consider, for instance, the Numerai approach, that is a branch coming from Medallion Fund, Real Assets Technology, Gene Simmons, we know. And just to make a reference to check what I'm talking about. But of course, AI for retail traders, we have to answer to this question. What is AI, not for JP Morgan, but for Giovanni Trombetta, Wieland Arlt, and for people, professional people that are working on the markets, but that they are not JP Morgan, okay? Of course, is a way to make it clear or clearer what is going on the market. For instance, if you approach the book now and 30 years ago, is completely different.
Yeah.
Now, one of the application of AI in which there is no race is the efficiency, the high frequency trading in terms of milliseconds, microseconds. That race is not for us, okay? Because machines are very efficient. They are fighting each other. And now even the microstructure of the market is changing in some sense because of this. But if we are talking about creating your own basket of assets for the next week, then AI can help you, for instance, to make an asset allocation. And basically, this is the main approach of AI that I use. I can tell you something more about this if you want, if you're curious.
Yeah, sure. I'm just thinking about really. So you know what crosses my mind. I mean, this evolution in trading styles and techniques. I mean, yes, you're right. We've been here for quite a long time already, and we've seen all the new stuff. I mean, first thing was trading from the chart. This is something that people don't think about anymore. It's just there. And it was big when it was, when it arrived. And then, you can set this line here. And when the price reaches this line, you get an alarm.
Yes.
And, then we were talking about EAs, expert advisors for, retail, mostly for MetaTrader or other softwares and professional softwares as well. And, then we came over to the algorithms and we're going over to quantitative analysis, and now we're talking about AI. And always it's the same question. It's, okay, so can I hand over all my decision-making over to the machine? Like the expert advisor, people love to have it when it just trades on its own and they just have to collect the money, which obviously is not working.
Yeah.
I mean, by definition, it's not supposed to work by definition, but people just, they love to do this, and well, we're losing money. So, but at the other end, how can AI help with this? Like, is AI really that solution where I can hand over every decision and just buy a package of strategy, a bundle, software, just click once a button, and then I just let it roll?
Yeah.
Is it possible?
I completely agree with you with your provocation, because AI is like a weapon. I said before, if you have a gun, but you cannot use a gun, the risk is to hit yourself. And that's exactly what is happening. I guess it's in common with quantitative methods in some sense. I try to explain. If you have a trading system, okay, let's take the gold future, okay? Gold futures responds very well to breakout strategies in general, okay? For instance, on 60 minutes, just to talk something concrete. You approach the market with the trading strategies. I will tell you one that you can try by yourself. That is to buy the 23 hours high and to sell short the 23 hours lows, okay, on rolling periods. So like a cast and channel on top and bottom. Okay, this kind of model will start to work. If you are lucky, you start to make some money. If you are unlucky, you start to lose some money. Maybe you stop your trading. Imagine to have just this strategy. At one point, the strategy will start not to work as expected. And so your question is the automation solving all your problems? Of course not, because, for instance, the psychology behind the design, there is, okay, what I do now is just transferred at a higher level, in which you have to decide where and when to stop the trading system or to continue to trade it. There is a decision that you can model itself. But if you model this decision, you have to decide when to stop the algorithm that decide where to stop the machine, and so on. So, in some sense, the human is ever at the top of the pyramid.
Right.
Anyway, this is the first element to discuss. So, the answer to your question is no. AI, but automation in general, doesn't solve completely the problems you have. Okay.
Yeah.
Then there is the black box problem. When someone is in front of you in the world of trading, selling you something that you don't completely understand, the only way to trust, for instance, the trading system that is selling to you based on AI or based on quantitative methods, doesn't matter, is to trade in real. I don't know any other way. Maybe Tom Stark will agree with me because we talked about this many times. There is, if I sell a trading system, I show you that I have prepared properly all the validation phase and whatever. Okay, it doesn't matter. Then I have this model. To trust the model, because it's a game of trust, I have to play this model on the market for a while. How long? It depends from the time frame, but let's say 6 months. Okay. After 6 months, more or less, I would have the idea about how it's made, how serious is the vendor of the system, how lucky or unlucky is the vendor of the system, because you can sell something very good, but the market will crash in a day. So you cannot. So then there is the black box problem. What is the black box problem? Is that the trading, in my opinion, is a question of trust, as I said. I guess you would agree with me.
Absolutely, yeah. Sure.
Because if you don't trust what you're doing, you will get crazy when things will get bad. And this is the key of trading. If you understand this, and I understood this after a lot of years, okay, because my mathematical approach was pushing me to phrases like this. Okay, it doesn't matter about psychology. Give me what it works and nothing more. Okay, is there something working out there? Okay, give me this and I will bite the markets. It's not like this, of course. So if you want to maintain the trust, you have, unfortunately, this is my opinion, of course, there is not the truth, okay? But my opinion is that you have to understand exactly what you are using, okay? What you are using, which are the limits, and you have to spend some time to know not the trading system or the machine, but to know your reactions to what is happening from the machine. For that reason, I create from scratch trading system, because I cannot use a trading system made by other entities unless I trust them very well.
Or you totally understand what's behind it, right? So when
I try to understand what's behind it. Sometimes it's not that easy.
True. I mean, coming from the retail side, for me, everything is, like, okay, price action, some indicators, how to put things together. So it's not that complicated. But of course, and I also know that a lot of people, they are looking for the perfect strategy. They browse the web, they're going for YouTube, they hear this and that. But at the end, from my point of view, it's not so important what kind of strategy you trade as long as it's your strategy. So tailor-made for you. I mean, you can look for a strategy, you can adopt a strategy, but it has to be a perfect fit, because for exactly that reason, you have to know what's happening, what happens when you enter the market, what might happen, what is the most likely outcome, things like this, and why things happen that way whenever you are enter the market. And if you don't do this, and if you are like just trading on your own, manually, discretionary, you freak out because you don't know what's happening right now, and so you make your mistakes. And that's something I totally agree with this black box problem. This is what happens to a lot of people. It's the same as, if you do some signal service or something like that, you just get a signal and that's it. So where does it come from?
I completely agree with you. We are overwhelmed by signals out there.
Yeah.
And if you follow a signal, what are you following? While you are gaining money, everything is okay, you are excited and so on. But for sure will come the moment in which you will start losing money and you will not understand why. And that is very, very, very dangerous for your mind.
Yeah,
for that reason.
you lose trust. You lose trust in the
exactly.
system. You start looking for another one. A lot of people change the service then, and so try another one, they fail again, try another one, they fail again, try another one, fail again, just because they just hop from one drawdown to the other one, never understanding why things are like this and what's happening really in terms of this situation.
Yeah, sure. Then let me, if we have time to tell our auditors what is AI for me in terms of what do you use in practice, okay? Because otherwise this is a funny talk about high-level concepts, but it's not well grounded, So, okay, basically I use this is another funny thing, let's say, because when I started with the first approach of AI, it was 2002, 2003, across the period in which I was trading penny stocks, but I was trying to learn from the university and so on. And the reason was I migrated to the quantitative analysis approach was, and the trading system approach, was both because I was losing money and because I was lazy. What does it mean? That's
a bad combination.
Yeah, very bad combination. In fact, those years has been the worst in my career, I guess. But I appreciate also the memory of that years because everything has started from that. I was lazy in which sense? I was lazy because every time I had to build a trading system, what I had to do was to read a book, to start to code an idea found inside the book, or an article, stock and commodities. I'm still buying stock and commodities after a lot of years just to see what is happening out there. And then I have to make the hard work that was the validation of the system and whatever. Then I started to think, is there a way to automate also the research part? And the answer has been a genetic algorithms approach. There is a part of AI. Let's make just, let me paint the four side of artificial intelligence just to understand where we are. There is supervised learning. There is, you give the machine some examples, the machine trains on these examples, and then replicate the behavior trained on new samples, so on new situation of market situations. Then there is unsupervised learning, where you don't have examples to give to the machine, that it's very hard, and you ask the machine to figure out the problem that you are giving them. You are giving the machine itself. That means, for instance, okay, you have the S&P 500. I don't want to clusterize in sets of different assets, considering, as usual, the volatility. But let's consider how the volatility will be in the next future. And the machine will clusterize assets from different sectors and whatever. Okay. Then there are evolutionary algorithms, and genetic algorithms is a subset of this. That is, we use algorithms. We have talked at the last IFTA conference in Jakarta about that, just to make a chain to what we did for IFTA. The idea is, okay, we take an evolutionary algorithm, some optimization model, basically, we are talking about that, and the machine itself will start to increase the probability of success of this model time by time, training, of course, on the past, to apply these trained models on the future. And then there is the four column of artificial intelligence that is very interesting, I would say. We have talked also with Tom other times. There is reinforcement learning. Reinforcement learning comes from game theory, in which you have an agent trading the market, for instance, and this agent learn itself time by time how to change his behavior in front of the market. The bad thing is that it's not the sacred grail, because of course you have to understand what the machine is doing. And again, the black box problem. Okay. But stepping back to the third column, that is evolutionary algorithm. What I was using, and I'm still using a lot, is the genetic algorithm approach to answer to this question. For instance, imagine to have the S&P 500, okay? I have the power to move something like 20 assets, okay, each week. And I ask the machine to create the rule, considering all the data that we have, that would be from that market or other markets. So it starts to be a big data problem, let's say, in some sense. Tell me which is the rule, the better rule, to decide if to take one single asset or to exclude another. I make for you an example. Imagine to calculate something similar to the Sharpe ratio, rolling, just considering the close of each asset. So if the close is positive, it's like a positive trade. If the close is negative, it's like a negative trade. So on a rolling period of 100 days, for instance, you can calculate the Sharpe ratio on this, okay? One rule coming from the genetic algorithm could be, okay, if the Sharpe ratio is greater than the previous one and is greater than 1.2, then take into consideration to have this single asset in the basket, otherwise not. This is a very simple example. This rule comes after the optimization using genetic algorithms, and so the AI part, let's call it, okay? But if you estimate in a precise way what we are doing, we are using algebra. It's not like a magic AI game. It's algebra applied, and you obtain the answer to your question. This is one of the two ways in which we use this. Then the other project that I want to talk about, if you have time, if we have time, is what I'm doing inside the Idle project with the Rocket Capital. There is a way, we have talked also in Australia a couple of years ago. The idea comes from Numerai on the US stocks, and we have built a parallel project on crypto assets. The very important thing is that what we built was completely transparent and completely written in blockchain. That means that in any case, every time you can rebuild everything, you can make reverse engineering, and you can demonstrate what you did, okay? But the idea was, okay, let's use AI in a different way. I don't optimize anything by myself, but I ask a community that I don't know, completely anonymous and decentralized, to test a data set that we provide each week, okay? Then you have, as a customer, you have to answer to a question that is, how will be the percent change, for instance, for the next week, or how will be the ranking inside the basket from the worst to the better asset? and give me this answer. I reward you with a proprietary token, and this game will start to play week by week. So each week I collect many thousands, even thousands of predictions, and then you can build on top of this a meta model to see, okay, this player is trustable, this one is not, because of the results of the last rolling period or whatever. And at the end, you allocate your money according, your money or the money of someone that wants to come in the game, according to his information. So just to clarify, the first approach, the genetic algorithms, was a typical optimization approach that you can do by your own as a retail trader, for instance. Okay. While the second one is a higher level project to combine many different machine learning models, so neural networks, XGBoost, or whatever you have heard for sure about random forest or other models, to collect all together the output of these models to create a meta model on top, like a big brain to decide what to take into consideration and what not. These are the two approaches that I like the most. Then, of course, if you are playing by your own, for instance, you're handling the money of your family, or you have a little company in which you work to handle the money. Another thing that you can do is by your own to replicate the multiple model approach. So you use all the data that you have, you ask every single model to give you a prediction. Of course, we are talking about prediction, but we are talking about uncertainty, okay? Then you collect all the prediction made by the models and you take decision on top of this. It's like to have an advisor, okay? Not an expert advisor, but a multiple AI-based advisor in that case. But I repeat, Wieland, just to conclude what I'm saying, more complex doesn't mean better. This is very important for me. Even if my collaborators tells me, okay, I found a fantastic new way to combine data to find, okay, let's see. But most of the times, if you produce more complex models, the results are not that good. So to make it simple, that is a mantra, okay, it works in the AI world as well, but not because AI is very complicated, could be very complicated, very complex, but on other fields.
Yeah.
On the markets, the market itself decide what to destroy and what to maintain inside itself, because the main problem remains the same. You can try a model, a training system, whatever. Your human approach as a discretionary trader on the past. Then there is the future, the present and the future. And the market will be the only player that will say, okay, this model will work for how long and if will work.
Right. So basically, I mean, starting just from the first point, first thing, what I learned is that AI, of course, reduces complexity by definition, right?
Yeah.
So
Yes.
even though it's even more complex, but it's more the back end. At the end of the day, when we use AI, we reduce complexity and also, make better decisions for reaching the best outcome, when it comes to different strategies or, different styles, different approaches. AI can help us with finding the best approach to the market in that moment. So did I get it right?
I agree.
Okay.
I agree with you. I agree with you for sure.
Yeah. So that's what people really can use. I mean, I'm pretty sure none of us really will, pretty sure also of the audience, none of us will start, with programming AI by themselves, but how to understand and how to use it is most important, therefore. And what also crosses my mind is, okay, so if if I can reduce complexities, this could be very helpful, you know, like collecting also data I might need for my work, for my trading, you know, like reports from the companies I have on my watch list, or some news about, you know, something like this. But it sounds more like, yeah, I mean, you could use ChatGPT for that one. I'm pretty sure people do this. But there's something, there should be something also like, yeah, but according to this news coming in, there might happen that. And the suggestion for traders will be buy, sell, hold, stay away, something like this. Can
Yes.
you sum it up like this?
Yeah, I agree with you. I would add something about one thing that you have cited, that is ChatGPT. Okay,
Yeah.
so now there is the hype in the hype. The hype is large language models like ChatGPTs, and let's say the vision that everyone now is able, with this advisor behind, to create everything. I would say that the good news is that now, if you have an idea of what to do with ChatGPT, is quite easy to obtain also some code to adjust a bug or whatever.
Yeah.
And of course, I'm using this kind of technologies also to enhance what I'm building, but also to understand what is wrong in the code. For instance, this is one of the best use that you can do with this kind of technology. If you want to start, for instance, to create a trading system, now you can ask ChatGPT, okay, please, I want to trade gold on breakout strategy, okay? And ChatGPT will write in Python, in easy language, whatever, the code. But again, it's a good stuff to start. But you have to drive, your mind has to drive the process. Otherwise, you will lose a lot of money. Remember, not you, of course, Wieland, because you know, but our audience, that the risk of playing the market is to lose money. Let's say the goal would be not to lose money and likely to gain money. So whatever instrument you want to use, drive the process. This is my suggestion. Drive the process and understand at a level. Maybe you don't have to go deep to this every single detail. An engineer, of course, is able to do that. But I know a lot of engineers losing money.
Yeah.
So, and I know many persons, I would say a couple of friends of mine, great in trading, but they don't know anything about technical stuffs and whatever. They just have vision. They understand what the market is doing and whatever.
Yeah.
It's something very precious, I guess, if you have. If you don't have, do like me, to build step by step from scratch.
Yeah, you better do. And another thing I'm thinking about the whole time is also, you were talking always about market prediction, something like this, you know, just pull all the news, all the data in, and get into some kind of prediction mode. I mean, that's also what technical analysis is about, to see what price point market might react in a certain way, break out,
Sure.
or pull back, or reverse, whatever, where some price action comes into place. But is this really that accurate? And really, you can say with AI that outcome has like a 60% probability that this happens when, putting all the data together, like you see in the movies always, where they predict the future.
Yeah.
So
Yeah.
is this really something to rely on?
I guess you have talked about movies. I remember a book about the author was Isaac Asimov,
Yeah.
science fiction. I was a fan of him, and he was describing a future world with the psychohistory in which many models together would be able, in the next future, to describe exactly not what a single individual will do, but what the crowd will do. from that it starts the wisdom of crowds theory and whatever. I don't know if in the next future, let's say in 50 years, I don't know, this will become true. But if this will become true, then the market itself will be involved and will change again. So it's a matter of something that will never stop in some sense.
Oh, it's a never-ending race, right? Like, who's first?
Yeah, but okay, now we are talking about visions. Okay, so
Yeah, true, but that's
but
totally fine.
but of course, what I see, what is growing are two different elements. At high level, this kind of visions, okay, that are fantastic. It's a way to imagine a different future and so on. On low level, there are a lot of tricks.
Yeah.
Because using the AI to just to sell you as a customer the grail to beat the market, it's like selling you something that you don't understand, and maybe you will use for a while, then the trust will go away and you will stop to use it. So my message is AI is good. AI is good, like it was good quantitative analysis, like it was good chart analysis.
Yeah.
But understand what you're doing. That doesn't mean to go inside every single detail, as I said before, but please understand what you are doing with this kind of technologies. I don't like, for instance, to buy signals unless you trust who is providing the signals, of course.
Yeah, true. Speaking of trust, I mean, people always like asking for, hey, have you back tested the strategy? And then you feel like, yeah, I did. Maybe yes, maybe no. I always say no, I didn't, because there are so many ways to, to trade a strategy, asset, time frame, management of the trade, like having a trading stop, having like different profit targets, several profit targets. So you can play around a lot of stuff, like changing time frame, starting in 5 minutes, switch over to 15 or 1 hour when the trade walks good, But then feel like I cannot backtest it. But a lot of people they insist. May AI help with this, like going through all the variations and giving us a perfect backtest?
Not really. I mean, backtest is very important for people like me that used to take into consideration numbers to judge what is in front of you. But the market are not just this.
Yeah.
So I agree with you. Sometimes, or even ever, for some people that are trading the market so well, like you, it's very tough to describe exactly in detail why you are taking a decision, why not in that specific moment. But again, AI is inside the game again, because basically I can describe you like a neural networks, a very complex neural networks, biological neural networks.
Yeah.
So the information that you have inside your brain are a lot more than the ones that you can model inside the machine right now.
True.
Maybe in the next future, this gap will be filled, but at the moment, you are completely right.
Yeah.
Let me say another thing about backtesting, because okay, I have talked with persons. Okay, I backtest everything from when I was young, but I discovered that backtesting is not enough. So there could be some alternative approaches. I read a lot of Marcos Lopez de Prado, for instance, about that. For the audience, if you want to take a look to the papers that are free online everywhere, or you want to buy some books from him, there are a lot of ideas alternative to the classic backtesting. But I would say that backtesting is just the first step, because we can backtest everything. It works on the past. And then it starts to fail. From today, from 1 month ahead, we don't know. So again, it's more important what you said about what we said together about trust than to backtest or not. you make the backtesting also if you don't do it. Because if you trust the model you are approaching, the way you are approaching the market, your brain is backtested in some sense. Because you know that what happened in the past, you know what kind of tough moment you lived in the past, and you know how to react. What is this if not backtesting?
It is. It's a manual backtest, like, doing it by yourself or by experience. And it's true, if you know your system, if you know your strategy, for my strategy, I can tell you exactly that moment when that one fails, by definition. So, and I can tell you, no, don't enter now. Don't enter now, but not now. But but the other one takes the next trail. And I also know if this fails 1, 2, or 3 times in a row, it's most likely that the 4th or 5th time it will work. Because it's a system, it's a strategy, it's a base of the strategy. So that's why, you definitely have to know what you are trading, not just asset-wise, but also strategy-wise, and what's behind the idea of the strategy you're trading with. So
I
totally agree.
completely agree with you. I completely agree with you. And the game is getting even more complex. And the more you add elements in the game, the more the game becomes complex. So you're right. AI is a way to simplify, in some sense, all the flux of informations coming to you. We are human. We cannot process data on 100 different markets at the same time, or intraday, multi-day, and whatever. It's impossible. So AI is a way to simplify the information that arrive to you, but the trust continue to be the first element, and backtesting, whatever it is, the classical one by code, or the experienced one you were talking about, is another crucial element, but also your capacity to react to new situations. You have seen what is happening for the yen on the markets the last 2 days. So this kind of events happens many times in the history of a human being. If you are that young, you trade from 1 year or even from 5 years, maybe you have never seen something like that. If you come from Japan, for sure, and in that case. So, and if you are trading for 1 year, for instance. So, what you have to understand is that, during normal situations, technical stuffs can help you to optimize, to make your performance even better. But the problem with this kind of tools, with this kind of elements, is that you are not that prepared with outliers, we call in math. There is events outside the normal behavior, like a big crash. Think about 2008. Think about 2001, and things about March 2020. And of course, having the capacity of understanding the risk you are taking is the key, in my opinion.
Yeah. I mean, speaking of a crash, can AI predict something like this? Right now, as we speak, like August 2024.
After it happens, yes. After it happens, yes.
We all can predict after it happens. It's very easy. But because right now, in this moment, beginning of August 2024, markets are very tough. People think about it might be a crash. Maybe it is, maybe it's not. But can help AI in this situation, like
I will
stay calm, or just
I will tell you the
everything?
truth.
Yeah.
I will tell you the truth from my observation. Okay. There are a lot of models that are predicting a moment like that. But each of these models alerted you in time, for instance, one time in 2020, okay. Then not the following one, in 2008, so and so. There is another model perfect for 2008 that doesn't work in 2020 and whatever. So my answer is, we are working to create something that can predict really in a good manner, not in a perfect one, because the market is not predictable 100%. And this kind of stuff, this kind of technology will grow up, are getting better, will be really useful in the next future probably. But at the moment, if I have to say that there is something that is able to predict a crash before it happens completely in a correct way, I would say we are far away. For one reason. The reason is that a machine can train itself using examples, supervised learning.
Yeah.
From that side, the examples are not enough. Okay, so now there is the way of training the machines on synthetic data, for instance, to replicate thousands of times the 2008 crash and whatever.
Yeah.
And this is a way. The other way is, for instance, the reinforcement learning that I have talked a while before. There is to create an agent being able to encapsulate in itself the experience of what is living. But basically, we are rebuilding a human being. If you think about, I'm not doing that, but science is doing that. But we are far away from that, I guess. But the way is exciting. For sure, it's exciting.
Yeah, it is. It is. And still, the question always is on the table, like, how can this really improve the life? So to sum things up is, it can help. So we can, as traders, institutionals, privates, both, we can benefit from AI. We can use it for reducing complexity. We can use it for helping us making decisions. We can use it for pulling some news, bringing all the information together, which is like hidden somewhere in the web. Just make it like an easy summary, an easy read, just one glance, making decision helper. But we definitely cannot go for, can you just bring me the money? And that's it. So we have to wait for this. And maybe, hopefully, it will never come. Because if it comes, it will fail by definition very soon as well, right?
Yeah, we are. I agree with you in total. We are playing with complexity, we said, and we are playing with an animal, the market, that it is changing itself, reacting mathematically of what is happening out there. If the players are changing, the market will change.
Right.
Of course, there is something possible to do. Going back to your last question, it's possible to predict a crash. For instance, many times I am with genetic algorithms, the asset allocation was telling me, okay, you have the power to stay with 20 assets, now stay with 2. This is an information for me that the risk is growing up, okay?
Yeah.
But we have to be 100% sure. Also, all the other times that we are with 2 assets, and this is not happening. So this for saying AI is not perfect. AI is growing. Our life will change with AI. Is changing with AI day by day. I won't say year by year. Now is day by day. But in the market scenario, I assume that this change will be different comparing to the other worlds, to the other fields like industry, automotive, and whatever, where AI is really driving the change in the market as well, but in a different way.
Giovanni, I have one last question, and maybe that could be a long answer. Let's see, because
please,
right now I'm building something in my head which sounds like, let's make a clone of ourselves. In terms of, can we use AI just assume I am a trader, just doing everything mostly perfect, but still I have some flaws in my trading. So I use AI to look at my screen while I'm trading. I'm doing intraday trading, let's say 2 5-minute charts, so things go very fast. And I have my strategy, I do my management, and AI sees and learns everything. But I also make my mistakes, jumping in too early, stuff like this. And after, let's say I train this AI like 2 weeks. Can I use this then to ask AI to optimize my own behavior in terms of entries and exits, management, when to trade, when not to trade, something like this? And then last, can I use AI after that to clone myself and to take over my job?
That's interesting.
I know you love it.
The long story short, what you can do right now as a trader is to collect your actions. Okay, this will become a database with the actions and also with the market scenarios at the moment in which you have taken your actions, and give this, for instance, to the equivalent of ChatGPT 3.0, let's say. And this machine will collect this information, and you can ask, okay, how can I make better in terms of risk and rewards? And the machine right now is able to do. The machine is a complex content provider that will say, okay, according to the theory of risk management and whatever, what I see from you is that sometimes you lose control, sometimes whatever. Okay, this is the simple answer. Is really useful. It depends from the quantity of data about yourself that you are able to collect. Okay, your question is very smart, because think that this kind of approach is also the one that they are using inside, for instance, some big company like JP Morgan, in which they are trying to ask the machine, okay, we used to trade our hedge fund like this. Is there something feasible inside to enhance the performance or to reduce the risk? They are doing the same question you are doing to me now. So if you don't use ChatGPT, but you use an optimization AI-based architecture, probably the answer would be more serious. There is probably, and this is the key point to change vision, is if the machine, and this is possible to train and to try, of course, I don't have the answer. If the machine can tell you, okay, according to your behavior, if you take into consideration an example, a fantasy example, okay, did you see that the volatility index every time you were losing money after the trade started was like this? This is the kind of information that machine learning and AI in general could bring to you at the moment in 2024, I guess. And this could be very useful to add an element that you were not using for your trading, for instance, according to the fact that the machine will say, okay, Wieland as an entity, as an agent, is playing the market like this. But if he would have used, because it's based on the past, of course, these additional elements, the risk will be less and the performance will be better. Then the last part of your question, can I clone myself in general, the behavior, is what they are trying to do with the reinforcement learning. If the agent, that basically is a neural network, is enough complex, in theory, I don't think it's possible at the moment, but in theory, in the next future, will be possible to create an 80% Wieland trader clone, okay?
Sounds like 80% hit rate. Leaving out the 20% loss.
Yeah, exactly.
I'm totally fine with this.
Yeah. So reinforcement learning is the key. Also, I repeat, I have cited many times Tom Stark, but we have talked about this with him many times because this is the frontier. This is the frontier of AI. One of the frontier, of course, is a fight in many directions. This is very exciting because what they are trying to do. When I say they, I'm talking about big companies. Okay. With a lot of power, money, and so on. They are trying to create an agent that will, with the goal of lower the risk, not make better performance in general, but to lower the risk. This is the driver for them because, of course, they managed a lot of money, all of us in hedge funds and so on. For the question derived for a single retail trader could be different, and probably we will have to wait a while more.
Yeah, I mean, there's good news and bad news in one, but on the other hand, I'm really happy to hear that the human element will not be, will not vanish just because of AI, and still,
Of course,
AI is just a tool to use by humans. And that's, I think, the most important conclusion right now. It's also good not to clone yourself because trading also, you need to experience all the pain which comes with trading to really, to really enjoy the outcome, which is positive, best. So, and therefore, and also there's no free lunch, right? So the idea of getting the money just by that, by pushing the bottom one time, it's very romantic, and of course it's tempting, but it's by definition it's wrong. It just can be wrong from my point of view, and therefore, yeah, I'm happy to hear this, and thank you for all the insights, Giovanni.
Oh, you are so welcome, and it was very interesting for me as well to talk with you about that because like every time we met also around the world. And I would like to conclude with a book, if
Yes,
I can.
please.
It's a book, not a technical one, that I have read many years ago. There is The Mind's Eye. Okay, The Mind's Eye. The author are Douglas Hofstadler and Daniel Dennett. This is the English version. I have read in Italian, Lio della Mente for Italian customers, but it's an exploration about what is AI, also not related specifically to the markets, but in general, considering what is possible to replicate in relation with the I idea, identity. Because if you heard it on television, on papers, on whatever, the risk is to understand that AI is already something autonomous. But you are completely right. It's a tool. Right now, it's a tool driven by our mind, by humans. Maybe in the next future will become something different. And in the book, there is the question, what is identity? Is possible to say that if I create a clone of Wieland that make 100% what Wieland does, I have created another Wieland, or is just a machine? With this interrogation, with this question, we can conclude if you want.
Yeah, we can leave this open and see what happens. So right now, I can assure this is a real Wieland and this is a real Giovanni, and I'm really happy about that fact for sure. Once again, Giovanni, thank you so much for joining me and for this fun
You're welcome. Thank you to you,
for letting us inside your world, the world of AI, and giving us some insights and aspects of how to use it and what's really behind all that hype. So let's see what happens, and talk to you soon. Thank you.
Thank you so much. See you soon. Thank you, Wieland.
That's already it, and I really hope that you enjoyed this episode and you took away some learnings for your personal trading. If you want to learn more about me, about my interview partners, if you want to have a one-on-one coaching or even get into a training course with me or my interview partners, just get into the show notes and follow one of All these links you find there, and then I will be happy to hear and see you again. Your Wieland Arlt.